Hello. The start screen broke a little bit today, but I'll be live here in just a few moments. We're going to take a look at Bitcoin as usual and see what's going on with traditional markets, and then we'll take a look at Dixie and gold. So we'll get rolling here in just a few minutes, see if anybody else is going to show up on the YouTube side. And for you guys that are entering the other stream, just for those of you that are newer, go ahead and introduce yourselves over there. There is now a like an introduction chat, and then there is a question box. You can submit one question for the stream. Try to keep it something that isn't hyper specific to your work over there at the prop shop. Okay, let's go ahead and get the music under control here. And we're going to get rolling here in just a moment. Just clean up this chart a little bit. All right, let's go ahead and get this rolling here. Hello and welcome to Macro Monday. No, this isn't Macro Mondays. What is this? This is not a Monday. It's a Wednesday. So it's Market Madness here on Landy's Crypto Corner. We are going to take a look at Bitcoin today. We'll take a look at traditional markets, Dixie and gold. And if we have time, we'll take some requests here at the end of the stream. Now, I want to welcome you. Today is August 23rd, 2023. And if you watched yesterday's Bitcoin in 60 seconds video, I had given you my targets to the downside and the upside here, as Bitcoin did close the prior day's candle with a nice red hammer right here above the weekly at around $26,000. And if it did lose it again, I was expecting it to go back and test the lows again around 25.2 to 25.3. It just swung that area overnight for me, and then has now popped back up and is looking as though it wants to set a technical low here, although I'm not as interested in this until I see it get above the lower first standard deviation of the Bollinger Bands here at this overhead weekly resistance at 26,750. Nice lower term time frame scalps though off the low and the lower second standard deviation, which in the prior day on Monday's Bitcoin in 60 seconds video, I'd noted that I was looking for a possible move back down to that lower second standard deviation area. At the time, it was at 25.5. It did move down to around that 25.3 to 4, and it spiked right into it a little bit past it there. Now, this lower term time frame rally, is it sustainable? Is the rally in traditional markets sustainable? Well, we're going to take a look at that today. Now, being on the weak half of the Bollinger Bands here, below major higher time frame resistance, where we did already see an initial rejection after closing below this weekly here at 26,750. Well, it would still be angled downside. As I mentioned on Monday, what bulls want to see is some sort of a lower high come in, and then the lows hold, at least down to the wick low, even if it is a closing lower low, and then take out that subsequent lower high. Because right now, we're not even going to get much of a structure change in terms of trend or a structure break or trend break, if you will, until we see closures at minimum back above 29.5, but realistically that 30,222 wick high needs to be taken out to really, paint a different picture here. Could you call this a little bit of a swing up? Yeah, I mean, you're going to see some swing indicators will point this out as a swing low with a lower high. Let's see if we can turn this on. Yeah. So you will see that there are certain swing indicators that will call this a trend break if we do see a close back above this wick high of this little move, a little bit of a W pattern here on this swing indicator. And, I'm not the biggest fan of looking at this like that because, really anything, this swing rather is going to be at 26,300, but anything below this last swing high at that 30,200 area, is not much of a structure change in my opinion. And in fact, when looking at the Bollinger Bands here, you can see that the lower first is likely coming up here soon if Bitcoin continues to rally in the lower term time frames. Currently trading around 26,442 to 26,450, and that lower first is right there around that overhead weekly resistance at 26,730. And just recall that weekly resistance right now is at 26,752 here. So big overhead resistance. If it can be reclaimed, I would be targeting a bit higher here. We'll go back to the Bitcoin in 60 seconds chart. I would be targeting the monthly over here at 27,200 to the daily just above it at 27.5. If that can be reclaimed, then I'd be looking for a retest of the weekly breakdown here at 28K to the basis just above it at 28,200, and maybe even a retest of that daily breakdown region at 28.4 to 5. But as it stands right now, getting a little bit of a lower term time frame bounce is to be expected, and we'll just have to evaluate it if it can break any of these major areas to the upside. Now, if it does break down again below 26K, I would definitely be looking for it to run the lows again around the lower second, which has moved down to just slightly above the wick low here in the 25.2 region to that daily support at 25.1 to 24.8. That really does need to hold up. That's this swing low over here from this would be June. So we do need to see this this hold up on a close to really, or it gets swung and we see some bigger divergences start to develop on RSI, OI, and many other things. But if that area is lost, I would be looking at the next weekly at around 24.3 to 5, possibly the weekly below it at 23.7 to 8. And that monthly is the line in the sand for me before things would fall, well, quite a bit further here. And that's at 23.3. If that is lost and then found as resistance, I would be looking down into around the upper $21,000 to $22,000 area, and then 21 and around the 20,000 to 20,500 area thereafter. To the upside, not much, like I said, is happening below that 30,200 spike high. On this little bit of a deviation of this 29.4 to 5 overhead daily resistance at the wick lows of that range built up top that went and spiked 31.8. And it's very likely that we see this develop a little bit more when looking at the daily stoke here as well. It really is going to depend how the next 2-day, 3-day closure goes. But the daily is right here at 26,133 for the momentum pivot. So it is a pretty critical area below the bearish control zone in the oversold zone. It can remain here, though, for extended periods of time. And if we do look at lower term time frames and we see that structure does not break and sustain, and we start to see the 4-hour turn down, for instance, that would be a bit of a bearish reset within the confines of this consolidation range. And I'll get to what I am defining as this consolidation range. We do have a little bit of a breakout in between some levels, but right now below, that 26,750 to 26.8, not too much. I'm not looking for too much more unless I see that area break to the upside, even at a back test or something like that. In this case, the 4-hour pivot is at $26,000. So again, if that is lost, I would be looking back at the current low side structure here. Let's go ahead and get rid of the swing indicator. And, we can see on the 4-hour here that there is the possibility in the next hour or so that if Bitcoin closes above the upper second, that we see further expansion to the upside. Now, we've already seen a similar look to the downside. We got a closure outside of the lower second and third, and then a giant spike down, and then right back into the basis. So that is something to be aware of. When looking left, you can see that this is trading on the wick high right around the close open here at that $26,600 to $630. So be aware that it could even move up to this 26,800 area, and it still hasn't done too much, but a reclaim of this structure right here from the breakdown candle, at least reclaiming the close, might start to look like it wants to head up and test some of those overhead areas that I spoke about just a moment ago. When looking at the daily, of course, that is going to be the big one by close of day today. And we did have a 2-day closure yesterday, and we can see that Bitcoin tracked sideways on the 2-day chart and is currently trading back above the lower second standard deviation of the Bollinger Bands, even at around that 26.1 region. And the lower first is coming in overhead here at 27,500. That would be that daily overhead resistance here. That would be this area right here, that monthly daily level. So 27.2 to 27.5. So be aware that that is technical horizontal support and resistance on a monthly and daily level. So if we did see things push back onto the lower first, it's not until it's regained would I start targeting the basis area, which is quite a bit further up. I'm sure that this is likely to tick down if Bitcoin doesn't get there first by the next closure in 2 days from now. That would be our Friday closure, right? Yep. And that is currently at 28.8. And this white moving average here, I will explain because I completely whiffed last stream and I did not explain what this is. This white moving average is a volume weighted moving average and it's running a 25 period. And you can see that it acted as a little bit of short-term support. When it was lost, it acted as resistance and then headed back down. It's just another... it's being a volume weighted moving average is just another way of looking at support resistance areas with that volume piece added. So adds a little bit more confluence. It often does track with the 20 simple, which is the basis band on the Bollinger Bands. So you don't necessarily need it. Sometimes I will turn it on though and remove the basis band just so that I can get some confluent levels when looking at price action. Now the 3-day also closed on yesterday's candle, and we can see that Bitcoin rather is right up against that lower second standard deviation, which is coming in at around 26,669. Nice. I'm sorry, 26,469 or around there. If it can regain that, again, lower first is coming in right there at around 27,800. And, what we don't want to see for Bitcoin if you're bullish is a swing of that area at the monthly daily overhead resistance above 27.5 and then a failure and a move back below. That likely would set up a trending move back to the downside to the current lows and maybe even lower. But as it stands right now, still expansion to the downside on any closures below the lower second. And, to call it out here on the 2-day, same thing. We'll see residual expansion if Bitcoin is still, below the lower first, but aggressive expansion is going to occur on any further closes below the lower second. So that would likely indicate a stronger drive down to run those lows and lower. But any kind of a regain of that lower first, going to start changing the picture a little bit. Just need to get above the overhead resistance of the range above price action right now, if that were to occur. So same deal on the 3-day. That lower first is there at that 27.8 to 27.9, just below that that weekly level at 28K, and the basis band here is coming in below that daily resistance at that 29.4 to 5 area. This is coming in at 29.3 or so. So again, from a trend perspective, it's still an overall uptrend, but the shorter term trend on the 3-day being down, got to go break that wick high. Again, $30,222 here on spot price. This is the Coinbase chart, by the way. And I did make note of this it was last week and the week prior of the 4-day chart and how it is set up for a bit of a range. And it's not until we see closures below the lower second or above the upper second that I'd be looking for more aggressive moves in either direction. It is pretty evenly stacked right now. We did see a run of that lower second standard deviation area around the prior lows. And the lower second is currently coming in at 25,586. This is going to be closing with the next 2-day candle, as a matter of fact. So lower first coming in that important area at around 27,351. So in between that monthly and daily overhead resistance at that 27.2 to 27.5. And we can see the basis band is up there at $29,000. And same look, that 30,200 is the lower high that currently needs to be broken to get a trend break. and then we can evaluate a structural trend change from there. 5-day. The 5-day is going to be closing today, and we didn't quite see the lower second hit. That is at 24.9, so right around that $25,000 area here at the low. And in this case, there are derivative exchanges that hit this area, but it's until we see a closure below there, not looking for really aggressive expansion to the downside. And again, very much a range setup as it stands right now until we see the lower second or upper second breached and closed above to kick off more aggressive expansion in either direction. Now, the lower first was just tested, or just shy of it, I should say, at 26,653 here on the lower first. If that is regained, I would be looking for a run back to the wick lows here on the 5-day chart, that is. And that is the 28.4 to 28.5 region. So the 5-day chart showing a lot more potential should we see it bounce and regain that lower first. The timeframes below the 5-day have a lot of work to do, but the 4 and 5 days showing a bit of a range setup. And if we did, of course, see the upper first, which is right where that wick high is coming in, around the 30,200 to 30,300 area breached and closed above, I'd be looking for it to run the highs at the upper second here at that 31.8 to 32.4 area overhead that I talked about for a very long time. We finally got that spike up into 31.8 at that daily, monthly, and the daily, weekly, and monthly overhead resistance. That was all the way back here. I had been talking about this since this move up back here, but that 31.8 finally got tagged, and then it was all downside from there, right? Big overhead resistance. When that does finally break, I think 35K is probably the most likely area coming up. But we'll revisit the monthly levels towards the end of the month, maybe even on Friday's stream. But yeah, the look on the, we'll go over the momentum pivots here in just a second, but I want to take a look at all the different time frames, Bollinger Bands here, and then we'll take a look at that other stuff. So the weekly lower second was tagged. Lower first is right overhead at 26,830, which just so happens to be, if we just throw down a horizontal here, that you'll recognize this area as being that 4-hour rejection right here. So that is pretty important area right around that lower first, and I would be looking for pretty big moves if it is regained, just like on the 5-day, 4-day chart. I'd be looking for a move back to somewhere around the basis. The basis is coming in right there at 28.4 to 5. So you can also see the volume weighted moving average has lined up directly with that basis. So that would be a big test. And below there, I do think that things stay bearish, possibly more downside or a bit of reaccumulation before a breakout through it. But if we did see it run up, I would expect at least lower term time frame resistance, and then we come back to it, see if it can break through and then hold it, and then we can start targeting those levels right back to the upside that you heard me talking about for about a month to 2 months. So that's kind of my outlook on Bitcoin in terms of the bull band setup here. When looking at momentum, we can see that right now 30,100 on the weekly, very far away from that area. The 5-day is right there at that resistance on the wick lows of the range above at around 29.4 to 5, coming in slightly below there at 29,350. Now, of course, that is going to update later today, so this number should come down pretty substantially, somewhere in the $28,000 region, I suspect, maybe even lower. We'll take a look at that on Friday's stream. The 4-day is there at 29,314, so same general area where the failure occurred to the upside, or the swing fail, I should say. But the 3-day, well, the 3-day will have a chance to turn back to the upside here on any closes above 26,563. I would say 26.6 would be a really good area to see a closure on the 3-day. And a little reminder here, that's going to be 2 days and 5 hours. So that would be a Saturday closure. So that will close over the weekend. The 2-day, which will close with Friday's candle, is quite a bit higher than the 3-day right now. And that is currently sitting at 611, and still heavily downside angled. And I do think that if we see a closure above the lower second standard deviation by Friday, that we're probably going to see price squeeze right up into that pivot as the lower first continues to head down. The lower second should continue to sweep under price action, probably end up somewhere around the 25.8 region by the next close. And then if that area is held, we'll eventually see, close over close, Friday closure, and then a Sunday closure again. We should see, if price holds above the lower second, we should see that momentum pivot begin to turn. Of course, the daily is already showing the etchings of a turn to the upside. It's a cross right now. That is, the cross is valid, but that's an initial cross of the K over the D read. And if it does complete that cross, that will occur on any closure today above that 26,133 area. So going to be an important day for Bitcoin to try and make some headway. We can also look at RSI here. There's no real divergences to be called out on RSI here. I'm not calling this a low yet. You'll see swing indicators will call it a low, but around that 26.8, 26.9 region is where I would, generally be calling this a low set in. And then we look to see if it can actually push up any further instead of just immediately putting in a lower high. But, pretty deep RSI read, one of the deeper ones that we've seen in a very, very long time. And that being here in the bull or the bear critical zone, sorry. And I mean, the last time that we saw this, for context, was June of 2022, and that was on the initial the initial push down breakdown from that very important level here at $26,000. Go figure. Just so happens to be the same level that Bitcoin is struggling with right now. So that big push down led to the lows at around, this was what, 17,000, I believe. Yeah, 17 to 18,000, 17.5 to 18,000. Had a nice, again, we had a really nice move up. This looks kind of small, but this was a 43.5% rally off of that low. It took a while, and it went, at a very slow angle. It was not just a very steep, upside mean reversion play, but, it did mean revert, and then, of course, went sideways for quite a long time, and down to that capitulation low area. Now, I do want to call this out. There was talk about capitulation. This here is capitulation, this here is capitulation, and this here is capitulation. That's all capitulation. So, we've seen capitulation. If you're looking at macro capitulation, that would be this major low that was set. Again, it's still not a macro low. Could it become a macro low if we set a higher low on the monthly? Then yes, but I'll talk about that a little bit more as we get closer to the monthly close, I should say. So I believe that's going to do it for the higher term time frame analysis on Bitcoin here. Let's go ahead and take a look at the 12 hour. So the 12 hour has regained the lower first, and we can see that the basis band and the volume weighted moving average are sweeping right down to that that wick high there at around 26.8 to 26.9. So, by close today, I would expect that basis band to be somewhere around that area. It's currently coming in at 27,200, which is at that monthly overhead resistance area that I talked about, well, a lot throughout this particular stream and in the Bitcoin in 60 seconds videos. So, generally when you see the lower first regained, your next target to the upside in this case, should it remain above there, would be the basis wherever that ends up. So in the next closure, if it does end up here, then I'd be looking in that 26.8 to 9 region, maybe even a wick above it, 27, maybe even 27.2 at that monthly. So that is something to be aware of. The 12-hour Stoke pivot is at 25,888, so 25.9. And we'll complete a little bit more of a cross up here. We do have an initial cross. I want to see another closure on that. That will happen at the end of today's daily. We can see that RSI, we're up over the moving average here, and it is headed towards the edge of the bearish control zone, most likely by the next close. That's currently already been tested at around that 26,660. So at least I believe that was tested. Just shy of it, 26,600 here on spot. So let's see, we can go down through the other time frames here. The 8 hour is right on the volume weighted moving average. It has gotten above the basis. If it can reclaim that upper first to upper second area, that would be a run of those areas that I just spoke about, 26.8 to 27K, possibly even a push up to 27.2 at the monthly. If it can remain above the basis and the lower first from the way that this currently looks, I would be more favorable to upside price action here. But right now it's directly on the volume weighted moving average. We'll see what it closes like today. Momentum pivot is headed up and looking pretty strong for the moment here. Pivot is lower than the last time frame, which is actually good. That's 27 or 25.7, and the 6 hour I imagine would be facing up. Yeah, and if we do see a close above the upper second, just be aware that you don't want to see another look like this where we get well, this didn't even close below the lower second, so that doesn't matter. We did see a close above it. This would look like continuation if it can continue to close above the upper second and hold that upper first to basis band, and even the lower first right now is still in play, and that is coming in at that 26K area. So above 26K, more favorable to upside price action to maintain this this expansion to the upside. I want to see it above the upper first and second on the closes here. That's coming in at 26.3, which is this wick high over here. On the upper first and the upper second here is at 26,430. So if you can hold that area, which is roughly right around this close open area. Yeah. So if I can hold that area on the 6 hour close, which is going to be through the end of today, then I would, no, I'm lying. Am I? No. 4 hours and 44 minutes. Yeah. So through the end of today, if it can hold above that upper second, then I'd be looking for a little bit more of a push up. And then the 4 hours I had referenced earlier does have a chance to close above the upper second, possibly get that expansion. This is where you don't want to see a giant wick, in this case to the upside. Look what we saw to the downside. That then just closes right back under the upper second, upper first area near the basis. If it does mean revert back there, as long as it's above the lower first on a close, still looking good. It can chop around, even bounce off of that area and then try back up. And again, that's coming in at right around 26K, that weekly. All right, let's go ahead and take a look at traditional markets here. Traditional markets on the daily. Now, I have been calling for a bit of a bounce here on traditional markets. and a deviation of the support resistance structure on Dow, and we have not seen this complete. Now it did open and then close back above or right on that 34,464 area. It has tried to test above, and it has not been able to get past it just yet. But the longer that this goes on, the more likely it is to set a low here and try further up. Now the lower first is currently at 34,650. A move back there. Likely, I don't see that happening today unless there's some sort of a late day rally. But it's likely to be right around this wick high at open tomorrow at 34,600 or so, or within striking distance to set a low. So if it were to set a low and reclaim the lower first, the next big area would be right around the basis band and the low side structure up here, which is coming in at 35,000 to, well, basically 35,000. The basis is just slightly above there. But that would be the next major area that I'd be looking out for on Dow. And it will have a chance to cross back up today. 34,278. What is it trading at right now? 34,450 or so. So it very likely, if it doesn't dump out before close today, that it does get an initial cross back to the upside here on the daily. And it's really the 2-day that was holding things down here, and it's still headed down below 35,350 or so on the 2-day. Now, is that closing today? No, that just opened. One thing you will note here, and that we did talk about in the last stream, is Dow came right down to the lower first. It has found it as support. And from the 2-day perspective, if it can reclaim this resistance here, then I would be, again, looking right back to that daily area that we just spoke of around the $35,000 area, 34,900. So, yeah, that's Dow for you. Looking okay. We'll check on the weekly on Friday. But looking like it wants to at least attempt to bounce if it can get above there. Oh, I should talk about downside. If it fails, closing back below the lower second here would just be continuation below the wick lows by the lower second here at 34,241, which is right around that daily pivot. So that's where we would begin to look towards the next area here, which would be the low side structure overall, somewhere around 34,000 to upper $33,000 area initially, and then possibly even a swing of this low side structure here at 33,700 or so. As it stands right now, it really hasn't even tested any of these other lower highs. Just this lower high here at that 34,250 area. So, there is quite a bit of support in there. I'd be looking for it to get further expansion down, but, probably try to hold those areas would be my best bet, guess from here, I should say. Not bet. We're not betting on it. That would be only if I see closures back below the lower second that start closing below the wicks as well. Let's go ahead and look at NASDAQ. NASDAQ, as I had mentioned, could possibly swing the low, the support resistance zone at the lower second. We don't see very many closures outside of the lower second standard deviation. It can still turn bearish up against that basis band all the way to the upper first. That would be pretty bearish. Above there, it's likely to run the highs again. Now the basis is coming in at 15,200. The lower first, is right at that support resistance area at that 14,900 currently. If that's lost again, I would be looking for a swing of the overall SR level, probably right back down to the low at the lower second at that 14,600, just below that 14,700 SR level. If that And that's where we wwere talking about. It could possibly swing this low over here and then try back up. Well, it has done that so far, but that doesn't mean that this is necessarily bullish. This is a structural downtrend on the daily. So we do want to see recovery above the basis at that 15,200. And then, we start targeting the upper first here at 15.5. If it can recover that and not just fill the gap up to 15.7, but actually start closing in those areas, it's likely that the upper second is in and around this gap, by the way, on any moves to the upside here, as the Bollinger Bands will start to contract on closures up against the basis. So I'd be looking for that area to be the critical one. You don't want to see rejections there if you're bullish. You want to see it plow through there, regain this lower high, and then take off and take out that higher high. Now, if it does start losing this last low, we just look left. Pretty straightforward here. The next big area to the downside would be this high at 13,900 to 14,000. So take it one step at a time. Now the 2-day, I do suspect we'll look at the daily momentum here first, of course, and then we'll look at the 2-day. Daily momentum's at 14,600, so it's the actual low. So if it runs the low and breaks it, it'll turn momentum back down. 2 days looking to turn back up. This just opened. Did get across into, but not above 14,900. It's going to be the pivot, and it's trading at about 15,000. So 15,200, not a stretch. We can see the potential for a hidden bullish divergence to play out here. There's many different RSIs. This is running a Wilder's RSI. This is another app.crowntrading.net indicator. There's plenty of free ones that have info boxes like this and show you divergences. If you are looking for one, I've got probably a ton that I could suggest. So just message me on one of the more popular platforms like x.com, formerly Twitter, and I can message me publicly and I'll link you to it, to a version of an RSI that has divergences called out on it. Now this is running a 14 period Wilders, not Cutlers. So showing this potential 2-day continuation drive of bullish divergence, likely to send it right back to the areas that I just talked about. So the look from the basis band here as well, on the 2-day right there at 15,300. So, critical area, the basis band on both the 2-day and daily. If it's regained, we're looking somewhere in that 15.5 to 15.7 area, maybe even that gap fill on the daily, and then see what happens from there. And then again, 14,900 is going to be the pivot on the 2-day. So we'll check on this on Friday. We'll follow up with that. And SPY has done the same thing. Essentially, it didn't get as low as NASDAQ in terms of swinging the bottom side or below the support resistance area on SPY. But it did, it's in a structural downtrend. It did close below this low, and it didn't quite hit that 430 to 431 target area. Did close back above that lower second. It has now regained the lower first, and it's headed towards that basis band, which of course is going to be headed down towards it. Currently it's at 446.50, and SPY is trading at 442. So 445 to split the difference is probably the upside target here. And I could see that. We've already spiked this open right here. The next big area above there would be 448 to 450. If it can regain that, we're looking back to the upper first here at around 452 to 453. You don't want to see, again, if you're bullish, you don't want to just see a gap fill rejection from the highs here at around that 455 to 456. You want to see it regained, reclaimed, and then the upper second here taken out at the highs at that 460 area. Now the daily momentum is up on closes above 433. When looking at the 2-day, I suspect it's going to be still headed down. Yep. NASDAQ was the only one that was like deep in the or getting towards the oversold zone on momentum for the 2-day from Monday's stream. So 444 would turn this back to the upside. Of course, trading 1 point below 443. Again, same look here on SPY. There is a potential drive of hidden bullish divergence. So likely, if this confirms, we'll see it head back towards the simple moving average around that 450 to 452 area. And again, the 450 to 452 area is going to be the top side of this support resistance level at the daily upper first standard deviation, at least currently. This will move down after the open tomorrow. So that's my outlook for SPY. If this does drop the lows again, there's still that support at 430 to 432. I would be looking for a run down into the 426 to 428 area, possibly even I would actually say it's 425.82, 425 to 428. And when looking left here, there is a bit of a gap just below there at 421 down to 419. So right around the 420 area. That's kind of where I'd be looking if we did see this support resistance level lost, and this low over here specifically at 431.19. But so far, looks like it wants to try a little bit higher. We'll see what the next couple of days hold for price action here in traditional markets, as I do know that the Powell is going to be speaking on Friday, I believe, at the Jackson Hole meeting, or he's got his Jackson Hole speech, I should say. Let's go ahead and look at Dixie. Dixie is right there at that resistance still that we've been talking about. It did swing the high quite a bit more in today's candle, right to the upper second standard deviation, which again, the second standard deviations, upper second, lower second, they're either going to act as reversal zones or continuation zones. So closes above, we'd be looking for continuation. Closes below, continuation, or you're going to reverse off of them. A lot cleaner in traditional markets, and even Dixie. You will see some closes outside for continuation, right? But if they're into a support and you're in the, in this case, lower second and third, probably looking for a retest and then a bounce. That's what it got. We could see, spikes right up into the upper third, but it's getting pretty critical when you see that the areas to the upper and lower second and third standard deviations. Right now, if it does lose the upper first here at 103.32, then I'd be looking for it to at least test this current wick low at 103 to the basis here at 102.69. Nice. It's constantly landing on a 69, by the way. If it does lose the basis, then we're looking right back to the support area at 102. So, it's probably ready to start painting a high, but it has not put a high in on the daily. So, if it did close back below this wick low, 103, then a high's in. I'm looking for it to head down to that basis and wherever the lower first does end up. Currently, it's at that support, but nothing too crazy there. This is a pretty extended move, and again, the daily's probably ready to flip down. It has confirmed actually a cross down and confirmed that cross on Friday of last week. And 103.85 would turn this back to the upside, but I do suspect the 2 days in the driver's seat right now still, and it is at 102.70. So losing the basis on the daily would then turn the 2-day down, at least initially, on an initial cross K below the D read there, coming from the top side. So until we see a high put in, it's probably going to keep testing this area. And at least got to see it lose the upper first on a close. It might even have a close open where the upper first moves above it. And then if it finds it as resistance, then we're looking for it to come down towards the basis band, that low and the basis band. So that will likely then that would likely see the 2-day turn down as well. In this case, if we do see it back above the overhead resistance here at 103.57, it can keep grinding out up against that upper second standard deviation, but it would need to hold this area on a close in order to avoid falling back down to, this high back here at 102.59, just below that basis band, as that would be holding this high side structure here, which it currently is doing. So if that's lost, likely see that daily high put in. So that's going to be Dixie. And then let's go take a look at gold here. Gold, I had mentioned, again, deviation of the low. This was the prior low that we were looking for a possible deviation setup, and that has occurred. And we've already seen the mean reversion back to the basis band. So already getting back to that 1920 area. If it is regained, I would start targeting this high side structure here at around 1940 to 1942. The upper first is slightly above there. It will move down today, likely somewhere in around this high, maybe like 1935 to 1940. That would be the next big area if the basis is regained. If we do see the lower first dropped, this would be another lower high, as it did open right on it, basically at 1897, 1896 area. If we did see a high like that, rejection trend remains strongly intact in terms of the Bollinger Bands, then we're looking right back to the lows here around that 1884 to the lower second area at 1874, which I believe, yeah, there is some highs over here. So there is a short-term daily high over here. And, just see what happens from there. But this has been a pretty big drawdown into a support area that has been tested and provided a decent bounce to that technical higher high, but because it never passed the 1985 region on a close, and just kept wicking off of it, even ran it not once but twice here on the daily, and kept running the close opens here. It's not until we see that area, recovered on a close, then we can't be looking back to, this daily order block, for instance, at around $2,010 or so. The daily momentum pivot is going to be right there at the lows at 1886. The 2-day is still headed down below 1910. It's trading above there. So on the next 2-day closure, which is going to happen today at today's close, which I believe Dixie should be doing the same, if I'm not mistaken, right? Is Dixie doing the same? Dixie is going to do the same. So we'll see the 2-day close on Dixie as well today, and then we'll revisit on Friday. But the 2-day, that 1910 pivot, lower second standard deviation was ran, at least the area around the lower second standard deviation. It was basically hit, and then it closed back above the lower first. I would be targeting the basis. And again, that's coming in around 1933. There is an order block here on the 2-day as well, coming right in line with that basis band. So that would be a logical pullback area if it can make it there. It is looking as though it's going to try. Just be aware that it, holds basically 1900. And that's going to be it for the analysis today. We can go back and look at Bitcoin real quick here, and I'll go over kind of what I had mentioned online on Twitter or X. I had showed this chart. Yesterday's rundown to around the 19, I believe it was 1919. I'm still thinking about gold, sorry. That would be the 25,300 area on most charts. this spike low held on a close on the hourly chart, held this wick low at 25,624. And what we saw was right below that, open interest was trending below that particular wick low. And when it was regained, we saw open interest tick down quite a bit. About 500 million was taken off in open interest, likely shorts closing and exiting around that area, which has provided some fuel for today's bounce. Now, when I was charting this myself, let's go to the 15-minute. We'll turn on volume, and we'll look at the swing fail chart that I have created for myself here when I am trading. So this is actually much the way that I scalp. We'll turn off bands. We'll turn off, we can keep the volume weighted moving average on there. And we'll come over here and we will, let's see, turn this guy on, and we'll turn these ones on. I believe this should give us my swing fail ranges. Yes. So we've got that major daily area from the prior low side that was set, that major low at that 24,750 to 25,1 to 25,2. Now was nearly regained or nearly ran that whole thing here on spot. It did not, but it did on derivative exchanges, and probably saw much higher volume and probably has a different volume profile. But we've got the swing low, high volume over here. We've got this swing low, higher volume over here. We've got this spike low. So after the breakdown of this 25,800, it was likely that it was going to go run this area. If this area broke, it's likely to go and try and run the lows. That was this candle right here at 25,350 on spot. Nice big volume bar. It did close back inside of this candle here. So it did run this candle low here at that 25,800 or 25,600 area after losing 25,800. Ran this guy, closed back inside of it, and then just marched. Found this guy right here as support, this higher volume candle, and then takes off to the upside and took out this higher volume rejection, the initial rejection that was kind of keeping things in this tighter range. And now it's headed up and tried for some of this area up here. Not quite as high volume. So if it can breach this area, that's where we start targeting that 27,000 to 26,800 area on these candles over here. So that's the basics of the swing fail setup there. And OI was really telling the story. The entire way through, after this spike down, open interest was trending below where this spike low was, while Bitcoin was trading, in the $26,000 area. So about $400 premium above where OI was, and then wipe it out. OI goes even lower and then reverse and right back up. Didn't break any of these structures on a close. So beautiful, beautiful, beautiful swing fail pattern setups. So that was a short exit for me and long entry. So I have already taken some profits and even sized up my long a little bit here today. And I took a little bit more profits at this high side area. And then now just letting it ride and then go from there. So that is going to do it for Bitcoin, traditional markets, Dixie and gold. Did you guys over in the Bitcoin, because you have two chats, you had a Bitcoin over there. Did you guys have any Bitcoin chat questions? This is not the YouTube stream. Here we go. Bitcoin's going to try for 26.8 now, it seems. Maybe even 27K up there. No, sounds good. Looks all good. Covered the divergences on traditional markets. Yep. On the 2-day, got that. Cool. How about YouTube? Let's see. We've got, oh, hello. So we got Jedi, Dawn, Bobby, Spin, Cheryl. Hi. How is everybody? Cool. Do I look at 10-year versus 2-year yield? I can. Although I hope my stream is still up on YouTube. BLZ. I'm seeing a few. Well, you guys were talking to each other in here. For you guys in YouTube, go ahead and let me know if the stream's still up. I'll give it a moment because I'm not seeing connection here. Interesting. Showing I'm not connected. I am connected to you guys in the other stream over here still, right? Yeah. Okay. Yeah, because you guys aren't delayed over there. Hi, Cheryl. Okay, Cheryl says the stream is still up. Cool. Thank you. Let me just take a moment here and read through the chat as Bitcoin did spike just shy of the 26,800 area. And again, that's that 4-hour spike high here. So I do want to see that recovered. Nice move though. This is looking as though it does want to try maybe even for 27K. Let me read through this for a moment. Okay, you guys are talking amongst each other. Not seeing any questions. Anybody have any questions or anything that they want me to look at? I'm seeing BLZ, but I think you're just talking about it. Did you want me to look at it, Jedi? 2-year, 10-year. I can take a look at the 2-year, 10-year if you want, Cheryl. I mean, there's not much. In terms of yield, we're seeing a drawdown, and I had mentioned that the highs were probably going to get ran. We are seeing a closing higher high, but a big old bear div here on the 2-year. So this is likely to come down pretty sharply and correct. So we also see that it's below the MA. And it's still an uptrend though. It did break it on a closing higher high, but till we saw highs above 5.118%, it's likely to keep heading down. The momentum pivot is going to be 4.98, currently at 4.96. Going to close that way, get across down, likely going to see a drawdown, a little bit further, probably back to today, to the lows here, 4.75 to 4.8. And then the next big area is going to be 4.64, at least in this current structure. That would be kind of what I'm looking for right now. But yeah, let's see. Bollinger Bands support this. Upper second standard deviation tap too. You don't see a lot of trending outside of it. We did see, aggressive upside when we do get rate hikes. But, basis again is at 4.9. That's slightly below the highs that were just tested. And I'd be looking at, there's a little bit of an order block down to the lower first, looking at 4.8. Again, that's right around the high side structure here, down to that lower second at 4.74. If it does lose that area and begin to head down, it's not until if it lost the low here at 4.71, then we're looking at this next low at 4.64 to that wick low. If we saw that break, because there is a big high over here, it's probably going to be a steep drop. for the 2 year. And that's yield is rising because bonds are selling off, and that's for selling for liquidity, and then you can even use that liquidity then to buy the higher yield bond if you want. Depends on how you're doing your swaps. That's why I believe the Fed and the Treasury came out with some kind of news today, by the way, that they are going to investigate speed traders for bonds. And that's likely what's happening with some of these speed traders is they'll use very large, get a firm that uses very large lot sizes for the bonds, and then what they do is they sell the bonds down, which pushes yields up, and then they immediately buy that higher yield, sell it down, push yields up, and they keep doing that over and over again, and it creates lower term time frame spikes that just kind of trend up and up. And that's likely what they're going to investigate. I don't think it's illegal. Like, not going to say that I would never do such a thing. So anyway, this is a high on the 10-year. So high is set in. Basis is the next target at 4.13. If it loses that, we're looking at 4.09 to the lower first here at 4%. If it loses 4%, it's likely going to aggressively drop down to around 3.85 to 3.78%. And then we can start targeting the lows at around 3.75% on the on yield for the 10-year. I forgot what I was looking at for a second. Now the daily headed down on any closures below 4.32. It's quite a bit below there. Bearish divergence as well. This is regular in-trend bearish divergence. 2-day, we're not seeing the same bearish divergence setup, but this will turn down on closes below 4.14. Currently, a high is likely to be set today on the 2-day, but it's got to drop the wick low at the upper first standard deviation. And then it's targeting 4%. If it gets below there, 3.85. Look at, man, I was right on the money with that. And then below there, lower seconds coming in at 3.68, but I suspect this is going to update to around 3.75, around the lows, 3.74 to 3.75. And that's going to close today. So, the counterpoint to that is being above the upper first is still trend integrity to the upside is still really good. So until we see that wick low, which is actually below the upper first, sorry, that's at 4.17. Till we see that, we start seeing it trade and close back below there on like the daily 2-day, then I'd be targeting somewhere around the highs here at 4.1% to 4%, and then see what happens from there around the basis band on the 2-day and the daily here. I suspect the weekly is probably going to turn. Yeah, the weekly's at 4.1%. So the weekly could start painting a top. It could still hang out up here for quite a while, but it might start painting a top here by the upper second standard deviation. We saw one close out. This will update at the end of the week, likely to the highs up here, or even the current wick high, maybe at 4.36. So 4.33 to 4.36 around the upper second. So it can keep running this area. But if we do see an aggressive sell-off that gets below 4%, then it's likely over for a while for bonds. In terms of the 10-year yield, 2-year, 10-year. The yield party's over at the highs, guys. All right, let me go ahead and jump into the chat here. Okay. Oh, yeah, Bobby. Oh, wow, the VMA 25, long time no see. I still use it. I just flip it on and off, and I realized that I hadn't been showing it on the streams at all. BLZ, I want to get my giga short. Oh boy. Freaking degens. BLZ, USDT perps. Are you trading Binance perps? You're going to have to let me know. I see Sol, BLZ. I think that's it. Hi, Ivan. I haven't seen Baba in a while. Hope he's doing all right. He's still. I chatted with him on Twitter a little bit, or at least I see that he's been on Twitter a little bit, or X. It's gonna. I don't know if I'm ever gonna be able to call it X. BLZ, USDT perps on Binance. Look at that. Oh, geez, that weekly actually looking okay. Lots of freaking volume on this weekly. Holy wow. I would say that if this breaks the wick high here at 13 cents, 13.794 cents even, I'd be looking for it. Well, it kind of already ran this high over here. I'd be looking for the wicks though, around this next high at around 21 cents. Now, what does Stokes say? Stokes says 7 cents. Looking good right there. There's no weekly bearish divergence just yet. It's got to put in a high above. It's got to put in a lower high above this guy here. So above basically the lower high, the main fake out higher high structure change. Oh, we've got an uptrend. Boom, down. Bye-bye. Looks okay on the weekly, I'll be honest with you. Daily looks pretty good, above 11 cents. It's gonna get some. This is building bearish divergence on the daily. It is below the moving average. Doesn't mean much until it puts in a high. This, I don't know what to tell you. This thing's ripping to the upside right now. I mean, you might be able to get a short in. If you see a reclaim of this area here at 11.99 cents, so basically breaking below 12 cents, it will put in a high on the daily here. You can probably target the low 11-cent region back to the basis. I would honestly be taking like anything above this breakout here is fine still, above like 9.666 cents. Gotta love it. It looks fine there. I mean, it's going to put in a high below this. You know, you're going to get a lot of people taking that swing low there at 11.764 cents. But realistically, it's below 10.5 cents that this thing is likely to try to head down further. And that's not even a guarantee. The breakout was on high volume, and the volume is decreasing as it's rising, which is saying that sellers aren't interested in shorting it just yet. So looks all right, especially if Bitcoin's going to rally. If Bitcoin continues to rally and doesn't just hit the overhead resistances and nuke, you're likely to see this continue after a little bit of a lower term time frame cool down. The 12 hours probably stretched out though. Nope, it's back up 13.5 cents. Trading at, okay, so it is currently under the 12-hour pivot. There is one drive of bearish divergence. That doesn't seem, it seems to be ignoring that, and just holding on to that upper first standard deviation and climbing. You're going to probably have to use your judgment with this one, because when it turns, it's probably going to turn hard. 4 hours probably building up a ton of bearish divergence. It is. I mean, but the bearish control zone is at 9.28 cents. So 9.28 cents is, it's already nuked to to back to its lows here. Oh man. On the 4-hour, bearish reclaim of this high over here at close was 12.64. It's likely to try to test down to the lower first if it loses the basis there at 12.404 cents. Basis is at 11.24, so that low 11-cent region. Then it's likely trying to put in a high, but you can see what happened. Every high it's put in, well, it has not put in a high in a little while. It's been some time, and expansion is catching up to it. It reject the upper second standard deviation today at 14.282 cents. I don't know what to tell you, dude. If you're looking for a position against this particular trend, you might want to wait for lower highs in the daily. That's my opinion. And because it's a ton of volume just came in on it. And until that cools down a bit, I wouldn't be looking for a short on any kind of leverage at least. If you're holding it spot and you want to take a margin short or something, if you're able to do that over there, maybe that's one way to look at it. But it looks pretty strong right now. It might even put in a high here, but the weekly is very strong as well. And it just broke a pretty critical area where tons of volume came in at this low. Like it was rejecting this low structure over here. That close was at 10.666 cents. Again, go figure. And it was getting brutally rejected from there, and the highs here just above. But once it broke out, it's pushing up. Can it deviate it and come right back in? Sure. But then we're looking for a drawdown of like 10 cents and maybe 8 cents after that. But this is looking pretty good. I don't know what the hell is all the volume's about, if there was some kind of a news event or it was just like we need to pump our bags. We've been accumulating for this long. Let's pump and exit. Who knows? So, all right. Let's go ahead and look at Sol. Sol has it's holding above 20 bucks. It did wick down below 19.29. It's not looking good, but it's also not looking bad. It's looking like it does want to try to bounce, but all these bounces have in the past couple of days, past week or so, have rejected that lower first, where it's kind of pinning out right now at that 2164 area. If it's going to set a low, it needs to do so above 2178 on a close. And once it does that, it's got to clear 2233. If it can clear 2233 to around 2265, I would be looking for a move to 2230 or 2330. I'm sorry. And that basis band around 23. So 23 to 2330. Then there is the breakdown area after this high was put in. Around 2371. That was our breakdown. When that, I believe I had said when that breaks, this is likely to head to this low and then try to work its way down. I had 1845 marked for some reason, but I should have also marked the high. My apologies there at around 20 bucks. I believe I've called out $20 before too, because if I'm not mistaken, that's like a weekly level, isn't it? It's a weekly open. Whoops. Yeah, it's a weekly open. No, I'm a liar. 2233 is the weekly open. There is an order block there. Ooh, went right into that weekly order block. Took out the bottom side? No, not quite. Yes. Nope. Took out the bottom side of the close on the bear candle. It's fine above here, but being, it's got to close above the basis band on the weekly at 21.51. If it can close above the basis band, then I would not be looking down to that 1850 area at the lower first. I would in fact be favoring a move back up to test the upper first if it could close above the basis, work its way through some of that overhead resistance, and at least test back around 24 to 24.50 at the upper first on the weekly. Right now it's set up for a range though. 1850 to the downside, 24.50 to the upside. If it breaks down from the lower first, then we're looking lower second, all the way down at 1550. Above the upper first, we're looking to the upper second, right around the highs, at around 27.50. Geez, it just really likes its half dollars, huh? That's pretty much it. I mean, if you're looking for like, I can look at like the 4 hour for you. 4 hour looks like it's still bearish, still downtrend. Do we have a trend break? We have a bit of a trend break. So if it can hold, again, if it can hold $20, it's probably gonna, the lower second area to this low at around $20. If it can hold that, it's likely to test up to around 22. If it can get above there, that would be a better look. I'd need to see that low recovered. It's probably going to take a little bit, and then you could start targeting, 22.5 to 20, or I'm sorry, 22.33 to 22.5, and then 23 to 23.70 or so, and then come back to it. Does that line up? Yeah, 23.25 is probably a key area. Yep. 22.72. It really likes its equidistant numbers on the lows to break down the breakdown area at 23.71. Yeah. It's got to take out this high. That reclaims this low over here. 22.21, 22.33. If it can get above there, it's probably going to run deeper 22 area to $23, and maybe even the deeper $23 area. Let's see, $20.45 on the 4 hours to pivot. It's a little over $1 above that. The 6 hour actually looks like a much better setup, 1964. So, and just so happens that the upper second standard deviation is right on that overhead resistance there at 22.30. So it's kind of where I'd be looking if we do see the upper first here regained around 21.80. Again, above $20 looks fine. Below $20 doesn't look very fine. Looks bad. Looks like it's a good short. Or, more lower high price action stuff going on. Let's go ahead and look at the 2-day. 2 days around that lower second. Did start to get expansion down into it, but not aggressive. 22.50 is going to be the 2-day pivot point. So we'll check on this on Friday and see where it's at. Does that help? Sol had some stuff going on today, right? There was some news today about Sol. Bobby, did I post something about Sol today? Can you check in the market section for me, if you're still there? ETH above 1700 is going to be good, by the way. Doesn't mean like it's going to rip and go back to 2K, but it's a better look than not. The Shopify thing, that's Sol with USD. It's running on Sol, right? USDT. on Shopify. Yeah, so they're utilizing Sol's chain for USDT and Sol Pay, I believe it is. Yeah, and they partner with Shopify to accept USDC. Did I say USDT? Meant USDC. So that does mean, it's likely to get a little bit of a news bump, but it's still all about the structure. And looks like it wants to try up for more. Bitcoin did finally hit the 26.8 region. Yay! Target hit while we were on stream. It did it. You did it, Bitcoin. Congratulations. USDC is, well, it does actually matter because USDC is making a lot of partnerships like this. And it's, I believe, let's address this. Let me get this one up here. This is fun. We'll talk about this for just a second. Not anything crazy, but most of the crypto market tends to have some pretty interesting takes when it comes to this kind of stuff, ETFs. And one of the big, the BlackRock ETF. This is something that I'll just talk about briefly as it is the end of the stream here. And I don't really have much more to say about the market. So BlackRock, this whole notion, BlackRock might own Bitcoin, but this notion of how the markets work, how ETFs work is really silly. All right. So Income Sharks is a fairly big account. If BlackRock was buying Bitcoin, it was years ago and for cheap. Okay. Then why would they not have applied for a spot ETF then? Right. Doesn't make sense. All right. So, or they were the ones buying 16 to 20K. They aren't announcing an ETF then buying at 30K. Don't make yourself feel better about buying the top, thinking BlackRock is buying where you are. This is a really silly take because this is not how ETFs work. So I had replied to them under here. I said the underlying asset creation units, which an asset creation unit is a lot of an asset or a stock or an indice. Typically 50,000 lots are the standard size. I don't know what they're going to do for Bitcoin or how they're going to allocate it, but the underlying asset creation units are purchased by the authorized participant after the sponsor is approved. And in this case, there will be the Bitcoin in this case will be custodied by Coinbase. The real money is made on fees and arbitrage. And I said below that, my point is price doesn't matter. First to market and market share does. First off, this is the actual ETF filing. So if you've never seen an ETF filing, this is just the ETF filing for the trust. And this is where they had to put in their rule change pursuant to provisions, yada, yada, yada. Their procedures were the proposed rule change was approved by the senior management exchange pursuant to the delegated board of authorities. This is all NASDAQ. And their self-regulatory stuff, their purpose, what they do, the description of the trust right here. The trust shares will be issued by the trust, a Delaware statutory trust. Okay. So the iShares Bitcoin ETF is going to be issued by the Delaware Statutory Trust. The trust will operate pursuant to a trust agreement between the sponsor, BlackRock, who is the sponsor. So they are the sponsor. as the trustee of the trust, will appoint the Delaware trustee of this trust. So they're the appointed, they are the trustee, and the trustee of the trust will appoint a Delaware trustee of the trust. This is all recursive language because the issuance are going to be, the issuance company is the Delaware company. So BlackRock's the one that's filing. They're the sponsor. You have the issuance is being handled by the Delaware subsidiary of BlackRock, and it's the iShares Delaware Trust Sponsor LLC, which is a Delaware limited liability company and an indirect subsidiary of BlackRock. So BlackRock would not be the one buying. They can buy Bitcoin whenever the hell they want. They can even buy their own ETF, but they are not going to be the primary holders. It's going to be the Delaware subsidiary, the iShares Corporation or Trust. They have many different iShares trusts. You can go look them up. Now, the biggest thing here is sponsor and the issuance of shares are done by an authorized participant. So the sponsor here is BlackRock Inc. and the authorized participant is the Delaware iShares Trust Sponsor LLC. This also outlines in this trust that there's the custody of the Bitcoin. So as an investment, shares are backed and held by the Bitcoin custodian on behalf of the trust. The Bitcoin custodian will keep all of the trust's Bitcoin and other than that, which is maintained in the trading balance on the prime broker. The prime broker is probably going to be facilitated by the sponsor in this case. I don't know because there's wiggle room within the trust. But in here, I'd have to look for it. Where's my search options? Do I get search options or find? Go Coinbase. Oops. Let's go to the first mention of Coinbase here. So description of the trust. Yes. So the assets of the trust consist primarily of Bitcoin held by a custodian on behalf of the trust. Coinbase Custody Trust Company, LLC, is the Bitcoin custodian. So that is to say, how many of you fell asleep? All right. So basically, I would put it to you like this. And the way ETFs work is the sponsor files. In this case, the sponsor is BlackRock, right? So when the sponsor files the trust, they are applying, or they are the sponsor of the trust, right? For the registration with the SEC and approval by the SEC. And what that means is that once they're approved, BlackRock is approved as the sponsor. And then actually, I might have this backwards. Delaware Limited Liability Company indirectly is the sponsor. So I'm sorry. BlackRock is I'm sorry, I said it backwards. In this case, BlackRock can hold the Bitcoin because they're going to be the broker. And the broker in this deal. So I apologize. I said that the wrong way. The iShares Corporation is the sponsor of the trust. Okay. So BlackRock is your authorized participant. So let me correct that. The sponsor of the trust is the iShares Trust, Delaware Bitcoin. It's going to be the iShares Bitcoin ETF. And they're going to be the sponsor. So once it's approved, and only once it's approved, do you start does the authorized participant, in this case BlackRock, start doing what's called my brain broke. They do what's called they gather together tranches. They buy tranches of, in this case, Bitcoin, to create what's called creation units. And then they handle, in that case, once those creation units are those, they're probably going to broker with somebody like CME. I believe CME's in here somewhere, but they're probably going to, CBOE or CME, and Coinbase most likely to buy the tranches that then Coinbase is going to custody. And if you think for 1 second that we won't see the freaking wallets, hey, you got another thing coming. Like, all these people, like, that's why all this speculation is that, oh, this $3 billion worth of Bitcoin that's sitting in the wallets now, or whatever it is, could it be BlackRock? Well, one, I don't necessarily believe that it is. It could be a wallet for set aside, that there's other parties that are preparing for a BlackRock or other ETF, because there's other ETFs that are using Bitcoin as, that are filing rather Bitcoin ETFs, and they are using Coinbase Custody LLC as their custodian. So what you got to understand is you're going to see those wallets just keep pumping. You're going to see Bitcoin being transferred into Coinbase, and then you're going to see wallets, and then you're going to see, creation units will be kind of, those tranches could already be there. So you don't want, Coinbase won't want to go and get this, go on market and get it right away. They want to get it ahead of time, but BlackRock doesn't have to buy any of it until, and in fact, they're not supposed to. They're not supposed to be doing that. They can hold it separately. They can then transfer their Bitcoin into the custodian accounts or sell it back to whoever. Doesn't matter. You don't fund, they're not going to fund the creation units until the sponsor has the approved ETF, in this case iShares, which is the sponsor. So the authorized participant, once the sponsor has approval from the SEC, then creates the creation units, and they're not going to do that. They wouldn't have been accumulating, 2-3 years ago just to do this now, right? Because, sure, you get the arbitrage of $3,000 Bitcoin to, your creation units are coming in at a spot price of, $26,000 or whatever, or even 20, who cares? Whatever the price is, or 30, who cares? Because their creation, you've been sitting on this the entire time. You would have had to have write down a lot of the losses over the years, and then you would have had to write down the profit. So people would have picked up on it if they were holding it. So it doesn't make a lot of sense. And where most of the money is made on ETFs is in arbitrage. Like what I was just explaining is, they can, because of the tranches that you can buy and sell, in order to maintain liquidity of the ETF, you get arbitrage opportunities, and that's really where most of the money's made. The same thing happens with SPY, and the SPY ETF and all the futures ETFs that run on SPYs, all the tranches are arbed. That's why the futures market does what it does. And after hours trading, it's all arbitrage trades, and then fees. They'll make more on fees and arbitrage than, it doesn't matter what the price of Bitcoin is. That's just silly. It could be 30,000 or 150,000. Does not matter. They can still, as long as they have a pipeline to customers that want it. Well, and guess what? They just happen to have, the most AUM in the world. That's assets under management, which means that they also have brokers and money managers all over the place, and get even a small percentage into the IRA and 401k markets through diversification, which most guys, by the way, I don't think many of you are going into your IRA or 401k and managing it directly, are you? They could just roll it into all their IRA and 401k packages, and boom. You've now got ARB money and fees that you've collected on that, and you've paid for all of it with OPM, other people's money. Why the hell would you be concerned about the price? Now, look, maybe 150K is a little aggressive. They'd probably ARB the other way and push the market down. But, they also had to name Coinbase, which, all these ethical companies colluding with each other through these different ETFs where they're partnering with one person to do, third party, I forget what the word is, but anyway, you'll find it in every article about Coinbase's, third party review so that it can prevent market manipulation. But realistically, the sponsor has to get the ETF approved, and then you get the what would this look like when the sponsor here, Delaware Trust, iShares Delaware Trust Sponsor LLC, which it's right in the name, sponsor. So I don't know why I said that backwards earlier. My apologies again. Then BlackRock, who is the authorized participant, when they start, just so you understand, when they start, aggregating the funds for the creation units and the first creation units hit market, guess what price is going to do? It's going to do one of two things. It's either going to go up or it's going to go down, depending on who wants to counter trade the launch. Okay? That's what you got to understand. It's either going to go up very sharply or it's going to go down very sharply. A lot of people are only it's all up only, guys. Up only. As soon as the ETFs launch. And in fact, because of the amount of liquidity that comes in, it might be up only for a while. But you could also get the opposite scenario as well. So I'll end it on that, I think. Let me just read through the chat real quick here. Some people think that the SEC will say no to the BlackRock ETF just so Bitcoin will fall in price and BlackRock will swoop in for cheap BTC. I think they already have cheap BTC. Look, they might, but there's no way to put that. It has no effect on the market. Who cares, right? Like, this is the thing that everybody's missing is they're all like they want cheaper. Like, well, look, they're the authorized participant, but if they're buying it, they are not on any kind of an exchange that exchanges and trades in Bitcoin. So they would literally have to go through a partner to do so. And if they're going to custody it, they're probably going to custody it all with the same people. And that's going to be Coinbase. It's not like Larry Fink is running around with a ledger around his necklace, right? He's got a ledger in his pocket, a ledger on his necklace, and he's got like one of those little wrist ledger thing. No, it's not. Sorry, that's not how it's working. You can have a bunch of the subsidiary companies underneath, right? Subsidiary prop shops underneath that are holding Bitcoin, but realistically, they're not holding it for the ETF, right? And in many cases, they're going to hold it in and not in any kind of exchange wallets or custody wallets. They're probably going to self-custody, right? So they don't. It just makes no sense to even think like this because it's not how ETF launches work. That's not how they're going to make the bulk of their money on Bitcoin. They're not going to make their bulk of their money on Bitcoin by it going down to $8,000 to $10,000 or $3,000 to $5,000 and then running the price all the way the other way. You the way that once the ETFs are launched, they're still subject to the market itself. And it's a decentralized asset that many different countries hold. It doesn't matter if you're bigger than all those countries. And that's not going to be their main focus anyway. Their main focus isn't going to be Bitcoin. They focus on all different sectors. They're in everything. They own everything. So their eye isn't going to be solely focused on just Bitcoin. There's going to be other ETF spot launches as well. You'll probably see an Ethereum launch, spot launch, for an ETF. And they'll probably be behind that one too. Like, the big thing is like all these people stressing about like, they're going to deny it, Bitcoin's going to crash, or they're going to sell it down to their price levels. Like, none of that matters. Doesn't even make sense. From a money management perspective, none of it makes sense. I'm going to use other people's money to buy the tranches. We're going to use our money manager's money to buy the tranches in exchange for shares of the ETF anyway. Why would I use any of our funds right now when I don't have to? I can just use all of the asset under management, and when the ETF spot ETF's approved as the broker dealer, I can go to the Coinbases of the world, the OTC desks of the world, buy the tranches with other people's. All they need to do is get the money from. I'll just say it's the easiest example would be to use the liquidity from the assets under management under 401k and IRAs, because that's probably going to be the easiest one to for those funds and different mutual funds, and just take those mutual funds and use that to buy the tranches, and then they get part of the ETF. They're getting their shares in the ETF immediately as soon as that's executed. So like, it doesn't make any sense to be sweating about what BlackRock wants. These narratives are the manifestation of crypto Twitter and uneducated people who run these crypto news sites. And then you've got these pundits in the media that are economic analysts and financial analysts, and half of them wouldn't even pass a financial analyst exam. Most of them would fail. Most of them would fail a simple FINRA SIE exam. They don't know what the fuck they're talking about 99.9% of the time on how any of this shit is created. In fact, unless you're actually utilizing and working in the industry day to day, most people don't understand it. And even people in the industry don't understand how this stuff works half the time. Just understand that BlackRock doesn't care what the price is. They wouldn't launch into an ETF or try to launch an ETF and get that approval, then to set a launch date and like all this other stuff and a listing date through NAS if Bitcoin was $150,000. The reason why they're doing it now is because Bitcoin came down off the highs very sharply, and this is a good place to get in where they can have all their money managers pitch it to their clients. This is the easiest way to get into Bitcoin, because you have to have that pipeline. It's a sales pipeline, and you got to be able to pitch that to your clients. And then you can roll it all into your existing products, because they already have a F ton of existing products. So just, understand that that's the way that world really works. It's like the big evil market maker theory. Like, there's freaking hundreds and thousands of market makers. It's not all aggregated into one $20 trillion account. There's a bunch of subsidiaries and a bunch of partnerships out there with prop shops or financial trading firms, prop shop, that have these liquidity agreements and like all this kind of stuff where they do money management and they get liquidity that they can trade with throughout the day. They can also trade ETFs and shares of ETFs back and forth. They can take options on all kinds of stuff. They can, it's not just one big market maker. That's why you have some firms that do great and some firms that collapse. Look at the Kramer. Wasn't there a Kramer ETF that just collapsed? I was reading something about that. Like, didn't somebody create like a we're gonna buy everything that Kramer tells us to buy ETF, and then it did nothing but lose money? I'd have to go check on that, but yeah. Just because you're a financial firm and you might even have ties and liquidity coming from a BlackRock, maybe you handle a portion of business that they've partnered with you on that they just don't have the expertise in, like a Bitcoin Kramer ETF. And no, it wasn't the inverse Kramer ETF. There was no inverse. This ETF was taking and betting on what Kramer was telling them to bet on, basically. Or am I missing that? Because an inverse Kramer ETF would be bigger than BlackRock and Bitcoin right now. Just kidding. Sorry, I made myself laugh. Oh, those guys over there are laughing about it. See, these you guys in YouTube cannot see. You guys cannot see the other chat, unfortunately, in the other stream that's going on over here. But I've got guys literally right here. Take care, Spin. Thanks for hanging out. What did he say? Gotta bounce. Thanks for all you brought today, Landy. You're welcome. I say once in a while, should dedicate a Bitcoin in 60 seconds for a rant contradicting the current narrative and use the charts to show them they're wrong. I mean, in this case, I would have to read their freaking ETF to show them they're wrong and then explain how ETFs are formed. But you are right. You are right. Call it Landy Rants in 60 seconds. You know what, sir? Bravo. Bravo. I'm going to give you a golf clap for that because I'm probably going to use that at some point. You will probably see a Landy Rants in 60 seconds video. That will be done. Brought to you by Spin B. So, but yeah. None of these, this dude just shows, and everybody commenting underneath it. Colin talks crypto. Colin doesn't know anything about financial ETFs. Then we've got Stone Jerome Powell. I don't buy this. BLK makes money off gathering. Oh my God, Stone Jerome Powell knows his shit. BLK makes money off gathering AUM, not trading profits. Thank you, sir. Thank you. It's almost like somebody said this the other day. First to market and market share does. Price doesn't. Oh, go figure. Man, it's such a stupid... and the problem is these narratives bait people in because some of these people might sound like they know what they're talking about. And they don't. They really don't. There's actually very few people in the crypto space that know what the hell they're talking about. And you have to navigate this especially if you're newer participants in the market, you have to navigate this environment where you have to use very high levels of discernment to figure out that a lot of these people are full of shit when it comes to most things, and they got lucky. They might know how to trade one thing, but that doesn't make them an expert in anything else. And I'm by far not an expert in this stuff, but I can tell you right now, I know when you're bullshitting and when you're wrong. I have been around the block a little bit. You're welcome, Cheryl. All right, but I am going to get going. But I want to thank you all in both streams. These guys over here are cracking up. Seeing ja. You guys are silly. I mean, these guys actually work in a firm, so they understand. But I'm going to let all of you go at the same time this time. I'm not going to be staying on for you guys over there in the other stream. YouTube, I want to thank you guys for hanging out. For those of you that are newer in this stream over there, I want to thank you for joining today. I know you don't know me very well just yet, but you will get to know me better. For those of you on YouTube, thanks for hanging out with me. You all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And with all of that said, Landy out.